There are more than 70 areas in Dubai, and we've analyzed all of them. Some will grow your money, some are better to avoid. So here are 7 levels of Dubai areas to invest in. Starting with level 1, areas with no future development. You don't want to invest in level 1, because if there is no future development, there is no future value appreciation, right? And Dubai is developing so fast. There are so many areas with dozens of residential buildings planned. Thousands of units are coming, but not all of those areas are great investments. Here's the chart with some random emerging areas. In Dubai Land Residence Complex, 16,000 units are under construction. In Motor City, 10,000. In GVT, 12,000. In Marjan, more than 6,000. In Production City, 7,000. So all of them seem to be actively growing and actively developing. But let's take a deep dive in Production City. What we have there now? 24,000 units, no schools, no hospitals, no public transportation. Is this a growing area? Yes, they're planning 7,000 more units, but no schools, no hospitals, and no public transport. The only new major development there is a new road, and it's hardly gonna make a difference. This is why Production City is the level 1 area. It's actively growing in number of units, but it's not really developing. Real development, the one that brings the value appreciation, is the development of infrastructure. And a great historical example of that is Dubai Hills. This chart shows the average price per square foot increase in Dubai Hills. It's more than 200% over 7 years. And the big reason for this growth is the infrastructure development. Dubai Hills has 2 very strong schools, and they were opened more than 10 years ago. Then they got the park, the hospital, then Dubai Hills Mall, and suddenly it's one of the most demanded areas in Dubai, and one of the fastest growing. This is what I'm talking about when I say the future development. And actually this future development is partly quantifiable. You can take the future plans of the area and calculate the residential to retail units ratio. If the number of residential units is too high compared to the number of retail spots, it actually means that this area will have a lot of residents and not that many things to do for those residents. So for Production City, this ratio is 70 residential units per 1 retail unit. Compare it to Dubai Hills, 16 residential units per 1 retail unit. So it's almost a 5 times difference. And speaking of a lot of residential units, let's get to the level 2, oversupplied areas. So overall they look fine, but they have this big risk related to the huge influx of new units. Now let's discuss one of them in more details. It's GVC. And GVC is an interesting example because it showed a pretty decent growth, around 30% since 3 years ago, which is alright, it's in line with the market, but most importantly, rental yields are really strong in this area. An average studio generates 8% rent-to-price ratio. 1 beds are around 7.4%, 2 beds are 7%, and these are average numbers, which basically means that there are some units that are generating 10% or even more. But GVC is level 2 area. It has this exact problem we're discussing now, oversupply. The number of ready units right now is 47.5 thousand. Units under construction, 35,000. So in just few years, this area will have more than 80,000 units. Compare this number to the areas nearby. GVC becomes 4 to 5 times larger than GVT, Arjan, and Motor City. So why is that a problem? Why having such a large number of units is actually an issue? Well, it's not an issue by itself. It becomes an issue when the increase in number of units happens over a short period of time, because you suddenly get a lot of new competitors. And when your units are not unique, you don't have competitive advantages, and then you can't charge premiums compared to other landlords in the area. It's the same as in business. If you don't have a competitive advantage and you have a lot of competitors, you start competing on prices. And price wars, they're very bad for your returns. And we had a case like that in Dubai. So it's not a theory, we practically saw the results. This is a different community, and there, since 2019 till 2023, the developer delivered more than 10,000 really similar units. So the owners had no competitive edge, had a lot of competition, so the prices they were selling for were pretty much the same prices they bought these units for. And since 2019 till 2023, the average price in this community increased by just 5%. But what this example also teaches us is that after some time, the prices come back to growth. We can see it here that in 2024 and 2025, finally, owners were able to resell at the prices higher than they bought for. Most likely the same will happen in GVC and other level 2 oversupplied areas. For some time the prices will freeze or even go down, depending on the unit, and then they will go back to growth when the demand will catch up with the supply. And this brings us to level 3, matured areas. When I talk about matured areas, I mean communities that are fully or almost fully built, that have high occupancy, that have all the infrastructure in place, and no or almost no new off-plan projects. They are not the worst investments, but they're not the greatest either. They have their pros and cons. So the main advantage is that everything is pretty predictable. Their growth is predictable, they can be growing alright, like let's take a look at Dubai Marina. It grew in value by 37% since 3 years ago, which is pretty much the same as the market. And take a look at the chart. The red line that represents Dubai Marina's average price per square foot, it strongly correlates with the Dubai average, the blue line. So if you invest in a matured area, in an area like Dubai Marina, consider yourself investing in the market average. And the rental returns, they're pretty average too. The gross rental yield in Dubai Marina is around 6.5%. Net rental yield after service charges will be around 5.5%. So these matured areas, they're alright investments, but the biggest issue with them is that they have growth limitations. First of all, there is no new development in them, and if there is no new infrastructure, no new schools, malls, etc., the growth potential is pretty limited. No reasons for the prices to go up. Second, they're priced pretty high compared to other areas of Dubai. They can be priced 30, 40, 50% higher than developing areas. For example, let's take two communities by the same developer, Damak Islands and Damak Hills. If you want to buy a 4-bedroom townhouse in Damak Islands, which is an early stage community, and this is an off-plan project, then you'd have to pay $380 or 1.4 thousand dirhams per square foot. A similar townhouse in Damak Hills, which is a developed area, and this is a ready property, will be around $540 or 2,000 dirhams per square foot. But if you're looking for the benefits of certainty, stability, and predictability, and if you want to invest in a matured area, then go for iconic areas. The areas that have something that will not go anywhere. Something that this area will be demanded for many years ahead. And in Dubai, the best example of the area like that is downtown. Take a look at its growth. It grew in value by 49% since 3 years ago, which is 1.7 times faster than the market. And obviously the big reason for that is that downtown is unique. It has Burj Khalifa, Dubai Mall, Dubai Fountains, and all these things that are super demanded, and they will stay demanded for many years ahead. And there is no much space in downtown. It's not such a big area, so if you invest in an off-plan property in downtown now, then in 3 to 5 years you'll get the unit that will be the best compared to others available in the same area. And this can be your way to beat the competition. Such new units can be much more attractive for wealthy buyers who want to live in this specific area, who want to live in downtown. Alright, we're slowly getting to the higher levels, to more interesting, more promising, better areas, but I want to offer you a shortcut. If you want to learn about the best areas in Dubai, get our insider report. It contains 10 best areas, 10 best developers, and 20 best projects to invest in Dubai real estate right now. And everyone who requests the insider report will also get our ROI forecaster. This is our tool that we created to assess any property in Dubai. It basically helps you to run the investment case analysis. You fill in all the data that you have about the project, and in return, it gives you estimations of ROI, IRR, NPV, and cash-on-cash returns. We're giving it away for free, so if you want to get it, you can scan the QR code or click the link below, and someone from my team will send it to you. Now let's get to level 4, affordable areas. Affordable areas are low-priced residential communities. These are places like Motor City, Dubai Land Residence Complex, or Arjan. The normal price for one bed in an area like that is around 1.1 million dirhams. That's 270-300,000 US dollars. Just for comparison, a one bed in a mature central area like Business Bay should be around 2 million dirhams or 550,000 US dollars. Affordable areas generally grow in line with the market. We'll show you 3 different examples, 3 different areas. The average growth of the market is around 30%, and affordable areas they show the similar trend, no matter what the area is. So if you invest in an area like that, in most of the cases, you shouldn't expect that you'll outperform the market, especially given that the current pricing for affordable properties is in line with the ready market, so there is no extra space for growth. If we take 2 different projects, one ready, one off plan, but in the same area, by the same developer, of the same concept, same class, then the prices will be pretty much the same. But the key reason why affordable areas are on the 4th level, and their key advantage, are rental yields. They can be pretty decent compared to the market average. Here are several examples. Dubai Land, Al Furjan, Motor City, Arjan, all of them show 7, 8, 9% rent-to-price ratio, which basically means that in these areas there are properties that generate 10, 11 or 12% rental yields. But there are rare cases when you can get both high rental yields and the value appreciation faster than the market. For that you need 2 things. First, the prices have to be lower than in other comparable areas. And second, you need the reasons for these prices to grow. Some shifts in the demand, or some big infrastructural changes that can push the prices up. And right now there is an area like that in Dubai. It's Dubai South. Market prices there are pretty low. If you take one beds in Dubai South and compare them to other one beds in other areas across Dubai, properties in other areas are 25% higher priced. And this area has a big reason for the prices to grow. It's Al Maktoum International Airport. And the thing is that this airport is undergoing a huge expansion. By 2032, it will have the capacity of 150 million passengers. This will make Al Maktoum Airport one of the largest in the world. And the result of this expansion is that they will create a lot of new jobs. 500,000 people will be employed in or around the airport. Operations managers, logistics managers, pilots, airline workers, etc. All of them will need to live somewhere, so they will create a huge demand for high-quality, affordable housing near their work. I'd say that Dubai South is an exception. Level 5 is early-stage master communities. And what I mean by that are several things. First is a master plan, meaning that there is a developer who defines how this community will evolve. Not just the residential buildings, but also the whole ecosystem. Schools, hospitals, roads, etc. Second, this master developer is the only or almost the only developer that builds in this area. And third, this community should be at the early stage of its development. First, second or third phase. So what happens in communities like that is that developer launches the first phase, then the second one at the price higher, then the third one at even higher price, the fourth one at an even higher price than the phase 3, etc. All of that drives the market prices up. So if you invested at the first phase of the master community, you benefit from this growth that is solely driven by the developer. And this is a proven method that was used in Dubai many times. Let's take a look at Arabian Ranches. The developer started selling the units in 2019. Then there was a COVID crisis in 2020, but they haven't decreased the prices. They've actually a little bit increased them. Then they increased them again in 2021, 2022, 2023, and 2024. The overall growth over this period of time was almost 90%. Cases like that are not rare, so this created a feeling among many investors that investing in a master community is a non-brainer. But it's not like that. Actually, many master communities fail to deliver exceptional returns to their investors. First, because many developers don't have enough land. For master community to be successful, you need to launch many projects over a long period of time, and for that, you need a large area. Second, building a good master community is not just building residential buildings. It includes building retail areas, roads, schools, hospitals, and many other things. And only a handful of developers have the expertise and the scale to do it right. And finally, the developer must be super strong financially. Because a truly great master community takes 5, 7, or even 10 years to complete. And the investment they make into the land pay back much quicker if you develop the whole land right away. And this is exactly what happens in some master communities here in Dubai. There are certain developers that sell out all the projects, all the units in their master communities in a matter of a year or two. But the magic only happens if the developer consistently increases the prices many years in a row. And the champion of master communities in Dubai is Emaar. That's their core expertise. What they're doing is that they're building them at the huge scale. They're pretty unique, with golf courses or with parks, with a lot of infrastructure, with huge malls. So this is something that is really difficult to replicate by other developers. Here's the list of their key master communities: Dubai Hills, Greek Harbor, Arabian Ranches, Emaar Beachfront, and Emaar South. All of them outperform the market significantly. And Emaar keeps launching new master communities. Right now, two most interesting ones are Grand Polo by Emaar and Oasis by Emaar, and both of them are pretty big. Grand Polo will have 6.6 thousand villas on 60 million square feet of space, and Oasis by Emaar will have 7,000 villas on 100 million square feet of space. If you compare that to communities by Damak, then in Damak Islands, they will have 15,000 units on 30 million square feet. Grand Polo had 2 launches up until now, Oasis a bit more, but both of them are less than 50% complete, so both of them qualify as relatively early stage master communities. And now let's get to the next level and talk about the areas that have a very decent chance to outperform the early stage master communities. Level 6. Early stage beachfront areas. Beachfront areas are the most desired areas in Dubai. Tourists want to stay there, many residents want to live there, but they're super limited. So beachfront areas are scarce. Out of more than 800,000 residential units in Dubai, only 4% are located in the beachfront areas. And if we take all the units under construction, the ratio stays the same. So because of that, they're obviously growing super fast. Some of them have even shown the growth more than 100% over the last 5 years. Palm Jumeirah have grown by almost 150%, Blue Waters by more than 180%. And these areas, they have shown tremendous growth over the last few years, but they're not the best for real estate investment anymore, because they're pretty developed. Everything is built there. And now, the new areas that are just emerging have a much better chance to deliver higher returns to their investors. And this is driven by 2 different sides. On one side, there is a growing demand from investors and end users. They learn about these new beachfront areas, they grow their conviction as more prominent developers come in there, as more infrastructure develops, and more of them buy units there, and it stimulates the prices. On the other side, developers are growing prices. There are some developers that are consistently launching beachfront properties in the same areas, and they're driving the prices up. One of the examples is on your screen. This is the price growth across new launches that were done by the same developer on Dubai Islands. So they launched their first project in April 2024, and then they consistently raised the prices with every new launch, and the result of their actions is that just over a year, they increased the prices by almost 25%. And Dubai Islands, which is the area where this growth was happening, is the best new beachfront area for real estate investment, period. In my opinion, it will outperform Palm Jumeirah, because Palm Jumeirah is too developed. It will outperform Mina Rashid, because Mina Rashid doesn't have a beach. It will outperform Maritime City, because Maritime City is 25% more expensive. And it doesn't have a beach now, it's just planned. And it will outperform Palm Jebel Ali, because Palm Jebel Ali needs 7 to 10 years to get developed. And Dubai Islands will become one of the main tourist destinations of the city, with a golf course on the seaside, with 86 hotels. All of that will attract a lot of tourist demand, while prices on Dubai Islands, they're pretty low. They're lower compared to all other developed areas. And there are projects on Dubai Islands that are now, if we compare them to similar properties on Palm Jumeirah, they are 50 to 90% lower priced. My team has exceptional expertise in Dubai Islands. We've helped dozens of investors to invest there just over the last year. We know every tiny detail of the master plan, all the future plans, every project that was launched there. So if you're looking to invest in this area, we're your go-to advisory and brokerage. There are several new opportunities that are not even publicly announced, but the developers are collecting expressions of interest or will be collecting them soon. So if you're interested in these new opportunities, drop us a message and we'll share more details. One of them is, by the way, on Island B with a private beach, and it will be developed in collaboration with the Big Hotel brand. A super rare opportunity for this area. And now let's finally get to level 7. Is ultra luxury areas. Just one chart to explain the rationale about these areas being on the 7th level. These are 5 Dubai areas in the ultra luxury segment, and this is their growth since 5 years ago. Al Barari 111%, Jumeirah Bay 151%, Palm Jumeirah 147%, Emirates Hills 153%, and Jumeirah Islands 158%. Over the last few years, ultra-luxurious properties and ultra-luxurious areas were the most lucrative investments in Dubai. The big reason why ultra-luxurious properties and ultra-luxurious areas grew in value that much is that there are not enough of them. If we take all the units in Dubai that are priced 10 million dirhams or higher, that's roughly 2.7 million US dollars. Then we get just 5.9 thousand properties. The total number of ready units in Dubai is 800,000, so that's 0.7% of the whole supply. And for us, that's pretty obvious that the trend will continue. Ultra-luxurious areas will continue to grow in value and outperform the market significantly, because the share of ultra-luxurious units, the share of units of 10 million dirhams or more in the future supply, is even lower. If we take all ultra-luxurious properties, ready and under construction, the total number of them is 8.4 thousand. The total supply, ready and off plan in Dubai, is 1.3 million units. So the share of ultra-luxurious properties is 0.6%. On the other side, demand is growing. The main driver for that is a millionaire migration. Dubai is the world's leading city in terms of number of millionaires and billionaires who are moving here. Over the last 10 years, the number of millionaires residing in Dubai has doubled, and just this year, 7,000 more are expected to come to Dubai. So if the trend continues, and if Dubai will continue to add 7,000 millionaires to its population every year, then this supply and demand balance in the ultra-luxurious segment will remain unchanged. Now the city has 81,000 millionaires and 5.9 thousand ultra-luxurious units. That's 13.8 millionaires per unit. If the trend continues, and more millionaires will keep coming to Dubai, and it should continue, thanks to UK tax policies, Australian tax policies, and overall global instability, then by 2028, Dubai will have 109,000 millionaires and 8.4 thousand ultra-luxurious units. That's 13 millionaires per unit, the same ratio. And now the highest potential ultra-luxurious area is La Mer. They're basically turning the area around, and there are 2 new areas within the area in the ultra-luxurious segment that look really promising. Number 1 is Asora Bay. These are several mansions and a limited number of apartments on the beachfront, fully serviced by Jumeirah Hotel. And what's really special here is that those mansions, they're priced almost 2 times lower compared to the ready mansions of the same level. Let's compare Asora Bay villas with Mars Al Arab villas and Jumeirah Bay villas. They're on the same level, all of them are ultra-luxurious, all of them are serviced by the ultra-luxurious hotel brands, and all of them are in the beachfront areas. The price for Asora Bay mansions is 5 to 20% higher compared to those 2 areas. The size of the plot, the size of the mansions itself, is 1.8 to 3 times larger compared to Mars Al Arab and Jumeirah Bay. This basically means that the price per square foot in Asora Bay is 2 times lower compared to the similar ready properties. And another ultra-luxurious sub-community in La Mer is Solaya by Miraz. These are high-end beachfront apartments. All of them are pretty large. The starting prices there are 14 million dirhams, and in total there'll be just 61 units. That was level 7, and now you should be much more intentional about the areas you're considering for real estate investment in Dubai. And you also should be super intentional about developers. Here's the video about the best of them.